Hey there, Vinny from Project Frugal. Another couple of weeks have gone past. Another road to 100k. Let's get into it. And here we go, straight into Denise's portfolio. So as we can see, there's nothing in the wallet. Good reasons for that. We've spent all the money. That's pretty much it, really. And whatever's left over has gone to the Sharesies save, as we've discussed on previous videos in this series. So purchases this time included Air New Zealand $750, KMD Brands Limited, aka Kathmandu, another $750, Turner's $750, Somerset $750, all up that's $3,000 worth of auto invest, and the other $1,000 went into Geneva Finance, $1,000, pay a reasonable dividend. Always been interested in getting hold of that particular company for quite a while, but never really got round to it. This time we have purchased it. And you can see here we transferred $4,007 from the Sharesies save into the Sharesies wallet to purchase these particular companies. The extra $7 is for the monthly fee for the $7 plan. So we do have the four companies here, $3,000 every month that we're putting into these particular companies, as it were. We got the auto invest on. We're actually going to turn this off because we're not actually going to have $3,000 every month because we're putting in $1,000 a fortnight. So in theory, we've got $2,000 a month that we could potentially leave. So maybe we could just leave this, but then we'd be putting in the $7 fee would be getting charged every time, and it's more economical to essentially burn through the whole lot, where you can put the $3,000 into the auto invest and the $1,000 as general purchases. So $7 worth of fees for $4,000 worth of stocks for buying or selling. Pretty good deal in my opinion. And if we went without the plan, then we would be paying 1.9% on those $4,000 worth of stocks. In that particular case, that would equate to $19 per thousand times 4, 38 times 2, $76 worth of fees. We're paying $7 worth of fees. $55,270.21. In the Sharesies save, we got $576.54. There has been a little bit of interest that got paid out. Not sure why the tax rate is not getting paid out as much. Well, it's probably because Denise is on maybe a lower tax bracket there. That could be the reason. $12.08 got created in interest for having the money sitting in the Sharesies save. $2.11 got taken out in tax. So essentially, by just putting this money every couple of weeks, whenever we get the money into the Sharesies save, we've made $10 this month. $10 is $10 more than we would have made by just potentially just sticking it in the wallet. And now that we've minimized all the fees, or as much as possible, with the plan that we've come up with, we're basically saving as much as we can for our particular scenario. So if you're into Sharesies, I would encourage you to do the same or a similar thing. And if you compare that amount of money, the $12.08 minus the $2, we made $10 whopping dollars, and we'd only just started this at the end of July. We would made a whopping 57 cents. So we've moved up the food chain. We've gone from 57 cents to $10. Although, having said that, the balance of the Sharesies save has dropped right back now that we've breached $4,000. That's why there is a balance in this particular wallet. Moving over to the actual application here. Friday, not a good day. Another $193.48 in terms of losses. $55,804 roughly. These numbers don't actually match up exactly with the Sharesies platform, and there are reasons for that, which I have explained in other videos. I've still got to take into account the fees, the interest. Haven't done that yet. We will get round to that, I promise. Anyway, that's the way it is. So $193.48 of a loss on Friday. Nothing to worry about. The last particular one, we were up $55,205. So the portfolio has gained $799 in the last 2 weeks, even though we've put in $1,000 extra dollars. In theory, lost $201 this fortnight. Never mind, it's all paper money. We're not going to be taking it out. We're just going to keep on investing. We're still up. At the end of the day, we've put more money in. Okay, maybe we've lost hypothetically $201 on paper, but nothing to worry about because the market will bounce back, and eventually that $201 loss will probably be a $201 gain. And the good news is there are a lot of dividends coming up in the near future. We've got all of these dividends coming out in September. There's a swag of them. September and October, traditionally in New Zealand, are the best months for paying out. And there's some decent numbers here. We've got $51.70 there for Air New Zealand, who have decided to start paying dividends again. They've just had a profit announcement. They've made money last year. Well, the last couple of 3 years they lost money, but they've finally turned the corner, thanks to the old COVID being all over and done with by now. We got some more money coming out for Barramundi, which is good because that's been a traditional loss maker on this particular portfolio. Contact Energy is paying out again, $76 there. Almost $100 for Colonial Motor Company. So overall, with the $97.77, assuming the stock price didn't change, we'd be up overall on that particular stock. We'd be up, how much would we be up? Roughly about $12 overall, not to be sniffed at, for a $2,300 investment. Okay, so the yield's no good, but never mind. We're not selling it, we're just holding it. If the stock price stays neutral for the rest of eternity, then we'll still get those dividends. And looking at some more, there's a swag of payouts here. They're all going ex-dividend relatively early this month. So we got the 7th of September, 6th of September. I'd expect some of these particular stocks will ramp up in terms of their price over the next couple of days. As soon as they go ex-dividend, the stock price will probably dip again, but that's what happens, generally speaking. Yields are reasonably good at the moment. In terms of the analysts, there's a bit of green there, which is always a good sign. Swags of stocks here. We've got, if we have a look at the totals down here, almost $500 getting paid out in dividends in September and $346.66 in October, totaling $840 to come back onto this portfolio, considering we've got a loss of almost $3,200. If we add another $800 in there, we'll be getting back to that negative 2,000 mark or thereabouts by the end of the year at least. Should be better than that, but we just got to wait and see it. At the end of the day, it's out of our control. The market will do what the market will do, and depending on what people are buying, selling, all the rest of it, and what companies are doing, whether they're making money, whether they're making innovative new products or services, or they're losing money. It's all dependent on what they do in terms of really how this portfolio will perform. Moving on to the transactions, let's just have a quick look at that. And you can see here's our latest purchases on the 1st of September. Going back to yesterday, today being Saturday, that was a Friday. By the time you're watching this, it'll probably be on a Sunday. Everything is buy or dividends, really. So buy, dividends in the yellow there, buy, dividends, buy, etc., etc. Back to the start of the portfolio, apart from one sell of CDO Investments, which was our initial $5 that we chucked into the portfolio just to start it off, and we just didn't want to hold that particular stock at the time. So in terms of the growth of the portfolio, it's just buy stuff, get some dividends, buy more stuff, get some more dividends. Even though the whole portfolio is negative, we will carry on with this portfolio and the same strategy until we reach that magical number of $100,000. Who knows what we'll do then? Maybe we'll carry on investing in it. Maybe we'll just start spending the money. Why not? It's our money. We've certainly saved up a long time for this, saved hard, and it will be worth it at the end of it. Let's have a look at those dividends there. So with the $840 on top of the $1,222 that we've already got for this particular calendar year from the 1st of January to the 31st of December, eventually, that will make a grand total of well in excess of $2,000. By the time we get up looking at the historical numbers, taking out September and October from the equation, should be another $400 on top of that. So we're looking at approximately $2,500 for this particular calendar year, which almost equates to $50 a week of dividend income based on a portfolio of $55,000. By the time we get to the end of the year, there'll be a few more thousand that have been put into this particular portfolio. So we'd be looking at 60 something odd thousand, maybe closing in on the $65,000 mark for our roughly our $50 a week dividend payout. I got another video that'll be coming out shortly on that and ways in order to essentially earn $100 a week. We'll go into that based on dividends and also based on term deposits, but not for this video. This is what we've got, probably $2,500 by the end of the calendar year. We'll go and have a look at the share allocation. Financial services still occupying close to 40% of this particular portfolio. The number has been going down. It was over 50% at one stage, but we are diversifying into other sectors. And the NZX 50 chart. So the week has been up slightly. The fortnight has been up slightly. The month definitely has tracked down. We had 4 good months of growth. And then last month was pretty much a shocker. Never mind. You can see this massive dip down here. Well, there is a massive dip here in August. Moving on to September, it's just sort of turning the corner again. So quite a substantial drop there in the last 6 months, but it is creeping up slowly again. We're going to carry on regardless. It doesn't really matter if the market goes up or down. If it goes down, we buy more stocks. If it goes up, we probably buy less stocks, but the portfolio value is at least getting to even Stevens, or making a reasonably good profit on paper, at least anyway. And no other major dramas in terms of this portfolio. The one good investment that I can see straight away here is the Geneva Finance. We put $1,000 into it. It's already made $28.57, and we literally only purchased it yesterday. So, or was it maybe the day before? Close enough. Last couple of days, we've made $28. Who knows what it'll do? It's probably going to go red. Looking at the way things are here, knowing my luck and our luck with this portfolio, but. We'll carry on. Supposedly it pays out in July and December. We'll be looking forward to getting a little bit of money out of that in December, hopefully, if we can get whatever the trailing annual dividend yield, which is not actually specified on this, but I do know it has been paid out in the past. In fact, we can go and have a look at it here. We'll go and see the historical results. And here we go, the Geneva Finance company. It doesn't have a huge market cap. It's only $26 million. They do financial services. So buying this didn't actually help the share allocation, as it were, because we're purchasing financial services when we said we were not going to, but we did in this instance anyway. So it doesn't have a lot of stuff that happens in terms of buying or selling, but we were fortunate enough to actually buy some. I don't know if that's good or bad, but as you can see from the charts, there's not a lot of movement, and it's quite blocky as well. So not one of the big favoured stocks such as a Spark or a Contact Energy or a Meridian Energy or any of the big players in the market. However, having said that, when did they last pay out? So looking at this, okay, maybe it's not a great buy at all. Well, they did pay out last June in 2022. Maybe we should have paid more attention to when they're actually paying dividends looking at this. However, it's too late. We've bought it. We're going to hope that they make a profit, and we're going to hope that they pay out some dividends at some stage. Obviously, we've not been paid out for dividends on this because we only just bought it in the last couple of days. And according to this, the last ex-dividend date was back in June 2022. We're hoping the credit crunch is over and people start loaning money through Geneva Finance. That's the plan for us anyway. Well, there we go. Another episode done and dusted, edging all that much closer to $100,000 in Denise's account. Whew, what a journey it's been so far. Got to have patience. Just got to keep plugging away, moving forward, little bites of the elephant, week by week, fortnight by fortnight, and carry on. Anyway, hope you enjoyed this. Don't forget to like, subscribe. We'll catch you in the next video. Have a great morning, evening, afternoon, night, wherever you are, and we'll see you later.